right, well, welcome to the November Economic Update. I'm here with JC Ganote.
Hey John, how you doing?
Good morning, good to see you. Yeah, I'm John Cleaver, partner and senior financial advisor here at Beyond Wealth Advisors, and believe it or not, we're getting close to the end of 2024. We just passed the election,
right?
And we'll be Thanksgiving and Christmas before we know it, so I have no idea where this year went, but here we are. And kind of the same with the economy. Man, what a resilient year it's been in both the economy and in the markets, with the consumer, just all kinds of things positively going on this year.
A whole lot more than you might have thought by this time of year.
Well, that's for sure. So let's kick off things just talking a little bit about the economy. It's certainly been remarkably resilient. Even with the Fed, their aggressive tightening starting a couple years ago, the tightest in 40 years. So how is that possible? How have we been able to maintain this level of resiliency that we've had?
There's been quite a few things that probably have surprised a lot of people this year in relationship to that, John, because, there's been so much doom and gloom out there about where the economy may be headed. But overall, the consumer's held up extremely well. The consumer hasn't really been given the credit, but they've shown that they deserve the credit because they really have kept the economy going, much more so than I think probably people would have thought earlier in the year. Plus, corporate profits have stayed strong. Corporate profits have been quarter by quarter this year as they've announced their earnings. They've stayed relatively strong all year long, and that's helped a lot.
Yeah. Well, and I think the other thing we've seen is just this idea of a rolling recession. We talked about this going back maybe even as long as a year ago. And each sector of the economy kind of is in its own little space.
Right.
And we've seen sectors do well and other sectors do weak, and then that kind of rotate through. And that's certainly been positive for the overall economy because not everything's been high or everything's been low. And of course, we're still coming out of some of the legislative impact, the stimulus that had an impact on the economy. So I think the million-dollar question going into next year as we think about where things are headed is, do we see this resilience continuing? What are your thoughts?
We've seen, interestingly enough, early on in the year, like you talked about the different sectors that were performing better versus others. The tech space obviously did very, very well the first part of the year, and the economy really didn't broaden out in a lot of the other stocks until just recently. It was basically a tech-led recovery, what we saw so much in the first part of this year. And now we're beginning to see a lot of other stocks in the market begin to broaden out a whole lot more. And they're kind of playing a little bit of catch-up in the last, say, this third and fourth quarter. And we've seen a lot of portfolios increase because of that.
So the term soft landing has been thrown around a lot in the last 10 months. This idea that we can navigate our way through this without a recession. So is that still possible? Are we on the verge of a soft landing?
It's interesting. We've never ever really had to engineer a soft landing like this before, to this extent. It's been a long time since we've had inflation like we've had to try to bring it down. And from all angles right now, it looks like we might get there. Yeah. I mean, it's not quite as bad as it even was 6 months ago to whether or not we were going to be able to do that. But with rates coming down, that helps a lot. The one thing that we could be concerned about a little bit, though, is if for some reason all the spending that our government's continuing to do and what, a lot of the spending that corporations are doing could reinflate inflation again if we're not careful. I mean, we think we're out of it.
Right.
And it looks like we are, and inflation is trending the right way, interest rates are trending the right way. But early on next year, it could be a little iffy if inflation begins to reassert itself.
Yeah, I think that is something that we're all kind of keeping an eye on. Certainly the cutting of interest rates, we had a quarter cut here in November.
Right.
Certainly we want to keep inflation in check, but all in all, it should be positive for the consumer, should be positive for business, certainly could be a catalyst for the economy to continue to accelerate into 2025. The markets don't always see it the same way. You've been around a long time, so you certainly know that. So let's turn our attention to the markets for just a second. And let's start in the U.S. equity markets. We've seen this, going back even to 2023, the large U.S. large cap U.S. growth market has really kind of driven this recovery, and that's continued into 2024. Certainly what we've all come to know as the Mag 7 and those mega cap technology stocks. But we're starting to see some broadening of the market. And let's just unpack that a little bit more. We've talked about it previously, but give some examples of kind of how the broadening of the market could impact 2025.
Yeah, it's interesting. I think early in the year, people were really almost a little hesitant to invest capital in a way where they didn't feel like they were investing in companies that didn't have strong balance sheets, good corporate profits. They were staying with the stuff that they knew worked in markets like when things were going to be difficult with it, rates where they're at. They wanted to know that they were investing in good companies. And so we had a real narrowing of that in the first part of the year, maybe the first half. And as a result of now seeing that broadening out in the other spaces, that is going to continue, I think, to lift the market overall in some of the value sectors. The value sectors of the market have underperformed a little bit outside of growth. Growth is where the money was found, but now value is an opportunity where probably some good profits could be found in the next.
Yeah, you're spot on, JC. In fact, we've seen large cap value up almost 15.5% this year, which certainly is a positive. And we've seen all sectors of the S&P 500 double-digit growth in 2024, and now mid-cap and small-cap stocks are starting to turn the tide as well as also. So with that broadening, where might be some opportunities going forward? What do you see as places that we may want to turn our attention?
I mean, there's still a lot of sector rotation going on right now in the economy, and believe it or not, a lot of the financials, and some of the ones that have really underperformed in the past are really coming back to life. I mean, I think there's a lot of opportunity in the financials. Believe it or not, there may even be some opportunity in energy coming up. Yeah. I mean, energy's taken a hit over the last number of months, and it's out of favor right now, but there's some opportunities, I believe, in energy, some financials, and still in the growth names as well.
Yeah, I think when we, absolutely, I agree with you completely on both of those. And of course, U.S. equities remain attractive. I mean, if the Fed continues to cut rates, that's positive for companies. We've certainly seen during this earnings seasons, right? We've seen really positive earnings growth. If companies are making money, that means things are generally good. And we've talked about this before as well. There's just an incredible amount of cash still on the sidelines. So even with a pullback, there's opportunities for cash to come into the market. And then historically, I mean, we've seen smaller and mid-sized companies do really well when the market starts to kind of recover and rebound. And the smaller companies can certainly benefit from that interest rate cut as well. So
I think you make a really good point, John, that there's so much money on the sidelines right now. And we've talked about that over the last couple of years, quite honestly, and it still hasn't found its way back in just yet. Yeah. And so I think that you're going to see a little bit of as the market does potentially pull back from time to time, you're going to see potentially investors buying the dip. Right. There for the longest time, we were selling rallies in the market. And now I think the people that have missed out on this opportunity we've seen over the last 6 months to a year are going to want to invest in the market. And I think you'll see a pickup on a lot of the pullbacks that we might have in the future.
Sure. Well, I know when we scheduled this recording, we weren't sure if we would know the outcome of the political elections, but certainly the markets like clarity. We certainly have more clarity a week later than perhaps maybe we thought we would have.
Makes a big difference.
It certainly makes a big difference, and that certainly is going to shed some light on maybe some potential opportunities to come. It's probably too early to tell exactly what that looks like, and we know it's not going to be up every day or anything like that. So let's shift just briefly to how about outside the United States, just real quickly from an international perspective. What does all this mean for international markets?
There's been a lot going on in the international markets. There's a lot of unstable countries out there right now for a lot of what's going on in the world, and China has its own issues. They're doing a huge stimulus package going on. They've done several huge stimulus packages over to try to stimulate their economy, because China has really slowed down a lot. And so I think you have to really be selective in what international markets you might decide to invest in, because there's just a lot of challenges. But a lot of the European central banks have been cutting rates also. Right. And that bodes well for a lot of investment overseas as well. But I still think that you have to be very selective in what markets you go into overseas. versus even some of our own domestic stuff that's looking pretty good.
Yeah, I agree completely. I think it was early this year we were talking about the idea that the international investing is very much country to country, right? At times you can kind of just be all in, but this year we really felt like being country to country really would have provide opportunities for us, and that's certainly the approach we've taken, and we think
be selective.
Yeah, absolutely. Be selective.
There's just so much risk out there in those markets of uncertainty right now.
Well, as fun as it's been to track the equity markets, we can't forget about the bond market, and certainly with rates changing and just kind of the environment that we're in, we know that bonds have had a little bit of an interesting run the last couple of years, and while we thought with rates coming down, bonds would really take off, and then we kind of had a pullback in October. So what are your thoughts on kind of where we're at with the bond market right now?
The bond market's an interesting animal because it tries to figure out where rates are going to be in the next 6 months to a year based upon current policy.
Right.
And you would typically think in a falling interest rate environment that the bonds would would do worse than equities, because when you sell bonds, yields rise because money comes out of bonds to go into stocks, so they put risk back on the table. But yet at the same time, we saw the 10-year yields back up. We saw them get quite a bit higher.
Right.
When the Fed cut 50 basis points back in September, you saw the 10-year go down to about 3.75, and at the same time, within about a month and a half to 2 months later, we were back up to 4.4 just the other day almost.
Yeah.
And that was in striking distance at the all-time high. That does not make sense.
Right.
And so I think a lot of investors were confused on what rates were doing at that point in time. And the bond market's trying to figure out whether or not we really are going to land this into a soft landing or not.
Yeah, absolutely. Well, let's wrap this up. I think as always, particularly as we approach this time of the year, with as resilient as the economy's been, the market's been, certainly maybe some clarity around the elections, we still know that the best thing we can do is just to stay focused on kind of our long-term objectives, long-term goals. Certainly have a plan. Certainly having a plan to reach our goals. And then, as always, talk with your advisor. I think year-end planning is certainly something that can bode well. So, and then we know there'll be a pullback at some point, right? And so don't panic. Markets may seem to be self-correcting at some point, but we've been there.
We've seen a few of those this year.
We've seen a few of those
and
this year.
We had some questions around that, but staying invested.
Absolutely.
As we know that it is time in the market, not timing the market.
Absolutely.
That brings us our most success over time.
Well, JC, as always, you bring such a wealth of knowledge. Appreciate,
Thank you, John. Appreciate
time today. And
gosh, catch up with everything.
Well, it's going to be 2025 before we know it. So thank you for tuning in. We look forward to seeing you next month. But for now, take care.
Thank you, John.
Yep.